In France, the election just ended a few days ago, and it ended along with President Macron's party as well. That's because President Emmanuel Macron's party did not win the election. This has led to major turmoil in France, since the party that won the election is different from the president's party, and their policies are very different. So this is going to cause some hiccups, some small bumps in the road, and even some major deadlocks. It's okay, right? The political deadlock is like, wow, it's a big deal. This kind of political instability, it really has an impact on the economy and affects the French people. Like, whoa, it gives you chills. Gotta hang up the phone for a sec. Thank you everyone for following the Sai Money Monster channel. The subscriber count has gone up a lot lately. It's really encouraging and I'm so happy. Thank you for every single comment. Thank you for all your support. If you have a different opinion, I totally welcome it. But please remember to comment respectfully and with consideration. No need to be sarcastic, look down on anyone, or insult anyone. There are so many different perspectives and we can all coexist with our differences, right? If anyone is interested in supporting the Sai Money Monster channel, you can do so right here. There's a QR code, or even just liking, sharing, or subscribing makes me really happy already. Now, let's keep going. I'm going to give a little background on French politics. In France, there are three major parties. The first one is called the New Popular Front, which is the far-left party. Their policies focus on using the budget for welfare programs more than anyone else, basically investing in the well-being of the people, like education. Things like healthcare and nursing. Basically, they offer the most welfare benefits and use the largest share of the government budget. This time, the New Popular Front won the most seats, with 178 seats, making them the winners of the election. Meanwhile, the second party is the centrist party, led by President Emmanuel Macron, which only got 156 seats, and the right-wing party is the National Rally. It's the party that uses the least amount of welfare spending. This time, they only got 143 seats. But in the French parliament, even if the party with the most votes only gets 178 seats, that doesn't mean they've won outright. It's kind of similar to our own politics, right? In our parliament, you have to get more than half the seats. Over there, you need to get more than 289 seats to be considered the clear winner. That's why forming the government still isn't finished. It's still stuck. The president is from one party, the party that won the election is another, but the prime minister is a really important figure. Right now, Prime Minister Attal is trying to resign, but Macron told him, hey, don't quit yet. Stay and share the fate of managing French politics during this chaotic time. Because, of course, the New Popular Front party wants the prime minister to come from their own party, right? The thing is, the prime minister has to be nominated by the president, but whether that nomination goes through or not depends on getting a majority in parliament. And right now, the majority belongs to the New Popular Front. So we have to wait and see what Macron might offer in exchange to get the prime minister he wants approved. But at the moment, the problem is that nothing is settled yet, right? So approving various bills, they don't pass the vote because the majority in parliament isn't there. But sometimes, certain things get approved and pushed through anyway, bypassing parliament altogether, using Macron's executive power. So it creates this feeling of like, hey, why are you going over my head? Okay, let's put the politics aside for now, because this isn't Politic Monster, where money matter, right? So with all this political chaos, plus the government spending heavily, it leads to things getting better. France was just downgraded by S&P, Standard & Poor's, the American credit rating agency. Their rating went from AA to AA-. Right now, the French government's budget deficit is at 5.5% of GDP. So S&P said, hey, this isn't reliable, and that's why they downgraded the rating. The political situation isn't good, and the budget deficit is still very high. At this point, some people are asking, hey, why does the French government's budget is just 5.5%, but S&P downgraded it to AA-. Meanwhile, the US budget deficit is 6.3%, so why does their rating still remain at AA+? You really can't compare them because the United States generates much more revenue, and they're also the issuer of the US dollar. The US dollar is a reserve currency, which means it plays a role in every economy and in global trade. Every country still needs to hold US dollars in their reserves to maintain national stability. That's why you just can't compare the two. As for France right now, they also have a lot. Not only does France have a lot of debt, but their bond yields are also high, meaning the interest rates on government bonds are high too. Right now, France's 10-year bond yield is at 3.2%. This isn't good at all, having such high bond yields, because France borrows a lot, right? The higher the bond yield, the bigger the debt burden they'll have to pay. And when this 10-year bond yield shot up? It spiked when President Emmanuel Macron announced that there would be an election. As I mentioned earlier, the fact that bond yields are rising is already a bad sign because it means the country needs to borrow more, right? When someone needs to borrow more, it means they need more money, which also implies they don't have enough cash on hand. If it were just an ordinary person saying, hey, let me borrow some money, I'll pay a high interest rate, it's really no different from a country saying, my debt pays higher interest now, it's attractive, let me borrow some more. That's what's happening. And the fact that France's bond yield jumped by 80 basis points all at once? An 80-point jump means that France now has to pay a much higher interest rate on its debt, which is already quite substantial. That's why S&P sees this as a problem. The political situation is unstable, the government budget is running a deficit of 5.5%, and now bond yields are rising even more. So S&P decided to downgrade France's credit rating. And how important is a credit rating downgrade? It's extremely important, especially for a country whose economy is struggling and that needs money to keep circulating. Because if you have a good rating and high credibility, your interest rates will be low. But if your rating is low and your credibility is questionable, the interest rates will be high. It's just like with regular banks. If a borrower is a company with good credit and a solid reputation, banks will rush to lend to them, right? But if someone's credit doesn't look good, or they don't seem trustworthy enough to pay back the loan, or there's a high risk they might default, the bank might not lend to them at all. Or they might lend but at a really high interest rate. Now, let's look at the party that just won the election, the New Popular Front. As I mentioned, they're the furthest left party with the most extensive welfare state policies and the biggest plans to use government spending. There are forecasts that if France follows the New Popular Front's policies, the government's budget deficit, which is currently at minus 5.5%, could go as deep as minus 6% by 2027. Now, let's look at this chart. You'll see the steps of bond credit ratings. The highest rating is AAA, followed by AA+, AA, and AA-. If France's budget deficit goes from minus 5.5% to minus 6%, there's a real possibility that France could get downgraded even further. That means it could drop from AA- down to just a single A. And once it drops to just a single A, it's only a few more steps before it falls even lower, to a medium or even low credit rating. Or who knows, it might even drop all the way to junk bond status. And if a country's credit rating gets that low, which is the rating used for government bonds, even if the government offers really high interest rates, reputable financial institutions still won't buy them because the risk is just too high. That would make it really hard for France to raise funds. And when it's hard to raise funds, a country without money is like a body without blood. When there's no blood, France's internal organs, so to speak, will start to deteriorate, and that could cause the French economy to decline even further. All right, so let's take a look at how much debt France actually has. France's public debt stands at 310 billion euros, which is 110% of its GDP, meaning it's already surpassed its GDP. In fact, France's debt-to-GDP ratio used to be even higher. During the COVID period, it shot up to 114% of GDP. But now, even though it's been quite a while since COVID, the debt is still lingering around 110% of GDP. That's really not healthy for France. To put it simply, it's like someone earning 100 but having to pay 110 just to cover their debts. There's a chance that a default could happen. Now, as for the New Popular Front Party, their financial policy focuses on welfare. The IMF has made a forecast, which was reported by Bloomberg Economics, predicting that if France implements the new Popular Front's welfare policies, the country's debt-to-GDP ratio will rise to 125% of GDP by 2027. This will make it even harder for France to pay its debts because it could push the government's budget further into deficit. As I mentioned earlier, the deficit could deepen to as much as minus 6%, and there's a chance that France's credit rating could drop below single A. Now, aside from France, many people are probably wondering, so which country's government bonds are considered the most trustworthy in the world? Is the United States really that trustworthy? Where does Thailand stand? Where does France stand? The countries whose government bonds are considered the most trustworthy are those with a AAA rating and a perfect score of 100, led by countries like Australia. But Australia isn't actually the most trustworthy country in the world. It just happens to come first alphabetically, so it's listed first. Besides Australia, there are 8 other countries in this group, as shown in this chart. As for the United States, S&P downgraded its credit rating from AAA to AA+ since last year. France is now at AA as well. So where does Thailand's government bond stand? It's at a BB+. What does a score of 65 mean? Scroll down to see the explanation. BB+ with a score of 65 means lower medium grade, which is a lower middle level of creditworthiness. But it's still considered investment grade, so there's no need to panic. It's not a junk bond yet, because junk bonds are rated lower than this.